My name is Kiketso Mufukeng and I am from Riverside High School. In preparation for accounting paper 1 on the 16th of November, we will be having our final push 10-minute videos starting from Wednesday, the 8th of November to the 15th of November 2023. Videos will be sent daily in the morning on this WhatsApp group. So, use these videos as you study. In this video, Mr. Simbi will be focusing on the Eastern Cape Paper 1 Prelim for 2023. In 2023, we say no to blank spaces. In 2023, we are saying it is my year to shine.
Hi guys, I hope you're well. As we are preparing for our final exam, which is just around the corner, we'll be looking at some of these question papers as we have just been told. One of the papers that we're going to be focusing on is the Eastern Cape Prelim paper for the year 2023. You would find that in the Eastern Cape Prelim paper for the year 2023, on question number 1, they asked a question which had to do with inventory valuation. So it is very important, dear learners, that when you are preparing for your paper 1, you must know all your 3 inventory valuation methods. That is your FIFO, your specific identification, as well as your weighted average. In this paper, they asked a question on the FIFO method. Let's see how you would answer such a question. If you come to the information, it says on information number 1, remember here we are doing the correct net profit calculation. But on this question it says the stock sheet below was omitted when the final stock figure was calculated. And then it tells us that the FIFO stock valuation method is used. So in this question we're using the FIFO method. And then when we come here, we see that the closing stock is 400. But the key words in this adjustment is the stock below was omitted. In other words, we have to consider this when we do our statement of financial position. So first we have to figure out what was the value of this stock that was omitted. So if we are calculating the value of my closing stock using the FIFO, this is very easy. I'll come here, then I know how many units that I need to have. At the end, it is 400. So I'm coming here, then I'll say 400 units. Then I'll say, in the month that is recent, in the recent month, how many units do I have? The recent month being April. The recent month is April and I have 350. Remember, if you had returns, you would have to subtract those returns. So I'll come here, then I'll say 350 over here. Then I'll say that 350 multiplied by the unit price, which is 100. And this will give me 35,000. So it's exactly the same as what you would see over here. But the number of units that I need is 400. So I'll now say 400 minus 350, then I will get 50. That 50 I now get it from this month of November, and the value is 90. So I multiply this by 90. And then if I say my 50 by 90, and that should give me 4,500. So I then add these two amounts. That is my 4,500 plus my 35,000. That will give me 39,500. Now that I have this, I also remember the key word. Remember, they said stock was omitted. That means when I do my statement of financial position, I have to come here, and when I look at my inventory, which is in my statement of financial position under my current assets. Remember guys, brackets are very important. So here I've opened my bracket and I need to know how much was the inventory in the list, and my inventory was 2,024,500. So I'm going to come here, then I'm going to say 2,024,500 plus the inventory that was omitted. How much was that inventory that was omitted? Remember, we calculated that was 39,500. So this adjustment was very important because it was going to affect your statement of financial position. I want to encourage you as you are preparing for your paper one, your final paper one on the 16th, that you practice or you revise on your 3 inventory valuation methods. Very, very important that you do so. All right, then one of the adjustments that I've been asked to do is adjustment number 3 here, which is the provision for bad debts. So I'm just going to quickly jump to that one to do the provision for bad debts adjustment. We've been told that the provision for bad debts must be adjusted to. So the key word here is the word to. Once you get a provision for bad debts which is adjusted to, that to amount, all right, the 2 will go to the balance sheet. Once you get a provision for bad debts is adjusted to, that to amount goes to the balance sheet. That simply means I'm coming here now to my statement of financial position, and I'm going to come to my trade and other receivables, as you see here. And then I am now told that the provision for bad debts must be adjusted to 28.5. So it simply means I'll come in and I'll say minus 28.5. Once you are given 2, it goes straight to the balance sheet. But if they told me is to be adjusted by, the by is what goes to the income statement. All right. So remember here we're doing the calculation of correct net profit, and you can see here we have to do the provision for bad debts. So we have to consider the provision for bad debts of the previous year. How much was the provision for bad debts last year? It was 25,300. And how much is it this year? 28.5. So you can see that here it has increased. How would I know that it has increased? If I look at what it was last year it was 25,300. And this year it has been adjusted to 28.5. So it therefore means that my provision for bad debts has increased by how much? The difference between the two, that is your 3,200. And an increase is an expense. An increase in provision for bad debts is an expense. It therefore means when I come here now and I'm now doing my provision for bad debts adjustment in my correct net profit calculation, I'm now saying I have an increase in provision for bad debts, which is an expense. So I'm going to come here and say 28,500. 28.5 minus 25,300. And the difference is 3,200, which we have agreed it is an increase. So, therefore, an expense of 3,200. All right, so I'm going to come here, then I'm going to say minus 3,200. Because it is an expense, therefore, it's going to decrease our net profit before tax. Eventually, we're going to get the correct net profit after tax over here. Hence, I have said minus. All right, so I'm just going to do one more adjustment before I stop this short video. All right, so the next adjustment which I've been asked to do is your adjustment number 4, which is insurance. One of the most important things, guys, as we're coming to the final exam is to know your timeline. Know your timeline. For example, here we're told that this is a pre-adjustment trial balance on 30 June. What it therefore means is my financial year begins on the 1st of July 2022 and it ends on the 30th of June 2023. Very important. Very, very important. And I know you know that aspect very well. Now, we are then told that insurance includes an amount of 40,800 paid for the period January 2023. So we are here now. January 2023, 1st of January 2023. And the period stretches over to 31 December 2023. It therefore means the period here, this period here, is the period that has been paid in advance. So the period that has been paid in advance is stretching from the 1st of July 2023 until the 31st of December 2023. Very important that you get that aspect there. So how many months have been paid in advance? Those are 6 months. And the period that has been paid for here from January to December, those are 12 months. So it's 6 over 12. Multiply this by what was paid, which is your 40,800. It therefore gives us an amount that is 20,400. What is that? That is our prepaid expense. Then when we come now to the correct net profit calculation, what we're going to do now is we're going to say on my insurance, I'm going to show you the calculation here again. I'm going to now say 40,800. Then I multiply this by 6 over 12. Remember, this is what gave me the 20,400. The question is, are we adding it or subtracting it? Because this is an expense that was paid in advance. It therefore led to a decrease in our net profit here. It led to a decrease because we recorded more of the expense than what was necessary. Therefore, our net profit went down. To correct it, we have to add it back. So we come here, then we say plus, because our profit was decreased. Why? Because we recorded an expense for a period which we have not yet reached, a prepaid expense. All right, I'm going to continue explaining more adjustments in this paper. Please watch out for video number 2, which is just going to follow soon.